Welcome to the Dividend Talk podcast, episode 179. What to do when there's nothing on sale and impatience kicks in. Dividend Talk is your number one podcast for all things dividend and stock market related with a unique European flavour. My name is Derek from Engineer My Freedom, and I'm joined with my co-host, European DGI. If you want to learn more about us, please visit europeandgi.com, where we have articles on dividend growth investing, including 30 European dividend aristocrats. While you're there, you might as well grab our free dividend portfolio tracker template. We also offer a premium dividend growth service featuring a bi-weekly newsletter, which includes stock deep dives, dividend stock cards, and access to our dashboard with over 130 dividend growth stocks. All of this is based on our very own dividend safety analysis. But enough about that. Please grab a cup of coffee and let's get started. Yay, European DJI. Another week, another podcast.
Oh yeah, definitely. And I was actually really looking forward to this one because time goes so fast, right? This is already the second one of this year. Luckily, we have still like 45, 50 to go or something like that, right? But the topic of today is something that's close to my heart because it's exactly how I feel at the moment. What to do when there's nothing on sale and I'm getting impatient. And I'm not the only one because it's several people also on social media, reaching out on this. And I thought like, sometimes it's good to have a topic when you're experiencing right at the moment, like you're in the eye of the tornado or something like that. So I'm really looking forward to talk about this today.
Yeah, it should be good, and 100% agree. While you're feeling these, I don't know if emotions is the right word, but while you're feeling this, it's best to get that perspective, because you can always look back and think, okay, was I right? Was I wrong? Or what did you learn? So no, I'm excited to chat to you a little bit about that. But before we get to that, we do have quite some news this week. And the first one, look, we have to announce it, is the NN Group. They made their announcement about the settlement and also the double-digit hike. I mean, it must be
this is amazing, right? Yeah, it was music to my ears because, look, we have this Dividend Growth Compass premium service for subscribers, and we did the first 3 issues for free to let people get used to, what we are actually doing and how we look at things. And NN Group was the third issue that we did. So if people are interested actually in NN Group, go to europeandgi.com and find the newsletter and download it. But I did there an extensive review of the potential settlement, and I think I calculated it to be between probably 800 million and 1.5 billion. So it came out on the low end, very low end, below the low end, at 360 million. And I mentioned already then, like, hey, if it's like around the numbers that I thought it would be, let's say like 1 billion, it can easily handle that out of the single year cash flow if it's needed. Yeah, but now it's even better because this 300 million, potentially a 60 million additional I saw for some wrap-up cases or something like that. Yeah. So 360 million in total they have reserved. This is just really awesome because what they did, and many people didn't know this, but you had to really not watch the news item. So I went to the investor relations website, and if you scroll down, it said like, and because of this, guys, we are committing for this year to a double-digit dividend hike as well, plus another 250 million buyback. So it's a little bit cruel, I would say, because I'm actually also one of the victims. I got already an email saying like, hey, your policy is eligible probably for this, so I may get a double dividend because I had a policy at the time. Yeah. And they will get back to me this, right? So they confirm that I'm in their database and da-di-da-da. But it's a bit cruel because this it could have been more, yeah. But I guess both parties, and I wrote that also in the newsletter, I think both parties wanted to settle. I think this union that was fighting for this at court come on, they're doing this for 10 years. They probably also want to do something else with their life. Yeah, these lawyers. So I think overall, I guess good. And I mean, you know, what I find really amazing, and it was our moderator on Facebook, Alex, who mentioned as a joke, like, I wish I bought more at 30. But guess who was buying a lot at 30?
Yeah, I remember. I remember. But I still think the valuation now is actually quite okay. I think they're sitting 37, 38 maybe. I can't.
Yeah. It's still, in my opinion, a good deal. No,
Yeah.
but you know that Treasury's department, they were buying the
Ah,
most.
yes, of course they were.
Yes, because they were buying just a few shares on their automatic buyback. The moment the share price dropped 15%, when was announced that about the settlement, they bought like 4, 5, 6, 10 times more shares than they usually did. They literally slashed all the cash of the remaining approval. They had to buy back shares. In a few days, they burned it all on buying back shares massively. So they got a really good bang for the buck. And I mentioned that already at the time, that this was very interesting. I then also bought some shares myself around this, because it was like, I think, start of October, late September.
Yeah, yeah,
And I mean, you need to have a lot of balls as a company to not keep it, because the easiest thing to do for a company is to just keep it on automated, right? You need nothing to explain after that.
yeah,
But now this was showing real bullishness in themselves, and yeah, they probably knew that it can't be that bad.
yeah.
And but as a shareholder, I'm so happy with this, because we can look forward again. I mean, many people after such a dividend hike, if they bought around the 30 euros, will be looking at a 10% yield on cost for a company with a relatively safe dividend,
Still growing
and
dividend.
still growing dividends. And the growing doesn't need to stop here either, yeah, for the next few years. So I mean, it is really this company in the sweet spot when it comes to that.
Yeah, yeah. And I like what management did here, and particularly around the dividend hike. They waited until they knew what the announcement was going to be, and then it was like, okay, we know it's not as bad as we expected. We're going to give more money back to the shareholders. I think
Yeah.
management have handled this really well, very transparent, and I think they've done a good job. But
I
yeah,
don't know that actually, because I was thinking about that
yeah,
here,
go on.
right? Because if you compare to ASR Nederland, who was dealing with the same settlement, ASR
They settled
went
earlier.
first.
Yeah,
Yeah, they settled earlier. NN started settling now because ASR did it. I listened to such a podcast about this, and the CEO of NN at the time, um, he didn't really want to settle. They still have, I think, anger from the earlier settlement a decade ago. So they felt like this is not honest, this is not fair, or something like that. I could sense that, yeah.
yeah,
And what also, NN Group is much more aggressive, yeah. And usually, I when I see this aggressiveness, I get a little bit like pushed back in my thinking, because I think like, okay, they're so aggressive now, but what are we talking here about? The CEO with HDHD or something like that? A CEO that, I said, is full of ego,
yeah.
because the ASR one, they are predictable. They communicate much better, in my opinion, than NN Group. Way more boring, yeah. But they end up doing kind of the same, yeah. But it feels more like when ASR is doing it, feels more like it's like more human, more humble, more
Yeah.
plan behind it. And then groups feels more like a bit of a bunch of people, a bit more aggressive, let's say, in everything they do.
But you not think it's smart on their have to wait. They probably waited for ASR and let ASR take the first hurdle. They then know what the benchmark is and where they can go and whether they can be more aggressive and say, okay, ASR did this, we can
Yeah.
keep going and not have a settlement, or they go,
Okay,
okay,
let me tell you this different. My gut feel says that NN Group is way more likely to get future settlements and fines again than ASR. My gut feel says that NN Group is way more, I said, susceptible to getting into trouble with a wrong takeover or
yeah,
something like that. I won't expect this from ASR just because of how the CEOs differ in their nature. That's my thinking. And therefore, I think also that if you really wanted to bet, I think that, for instance, if it ever happens, right, in the next 20 years, I think it is more likely that an N group gets a dividend cut than ASR. I find ASR more solid, more boring, a more humble CEO. But both are great companies at this moment from a dividend growth investment point of view.
Good take. Yeah, that's interesting to hear, because obviously you've done a lot more research in that sense, in that space, that both Dutch companies.
Yeah, so I
No,
can
you
listen to
can
the
understand. Yeah,
CEOs in their own language, the tone of
exactly. Yeah,
voice they use, the words they use.
yeah, yeah. So I get that. I get that. We had news, actually interesting news this week, and it's not something we speak about often, but we can't not talk about it. Come on, it's this spot Bitcoin ETF, approved by the SEC eventually. I mean, what's your take? What's your thoughts on this?
Wow, this was of course a slapstick, right? Because
Yeah,
first of all, someone breached the account and put a message out there like, "Hey, and then the Bitcoin went up to the moon, and then they had to say with shame on their cheeks, saying like, "Oh, no, we were breached." Even Elon Musk stepped in, saying like, "Hey, it was not on our end. It was something with security on their end, on the phone. Someone used someone's phone or something like that, probably without two-factor authentication." The SEC, right? The SEC. So
yeah.
it's
This is crazy. Yeah,
yeah,
yeah.
yeah. It's not an NGO somewhere.
Jesus.
So, but generally speaking, I hear now all these predictions: Bitcoin going to 100K in the next, maybe in a year now, maybe in 500K in a few years from now. It's now trading at around, what is it, 45K or something like that. And I think like, oh my god, this is wide in the news now. All those people that are getting FOMO, that will now buy into Bitcoin, don't understand what they are buying, the volatility. It might go to 30K because something happens or something like that. Yeah, and then they sell again, get burned again because of the volatility. But I'm sure many people have a fear of missing out when they hear all this news, like, yeah, it may go to 100 in a year or something like that.
So
And this is what I'm afraid of, right, for people. And I think even if it goes to 100, hey, look, we have been following this since 3000. It's now 45,000. Everyone that's invested in Bitcoin and stuck to Bitcoin, so far has been on the right end of the story.
yeah,
Yeah.
yeah,
But we have seen so many people being burned over this 4 years on cryptocurrency because of the fear of missing out. And this is what I'm mostly concerned about.
yeah. Like, you have to say that now that you have an ETF, it's open to the mainstream. It's likely it's going to push to the 100K. Maybe in the short term, it might not sustain there, but it's likely
Yeah.
it will get there, because you're going to have lots of these people who were sitting
Buy
on the outside.
automatically. Yeah.
Yeah, but they were sitting on the outside because cryptocurrencies and buying them was
Yeah.
difficult. Difficult exchanges.
Katie. Yeah.
Exchanges were going bust. So this is, quote unquote, a safer way to buy
Yeah.
crypto, as
Yeah.
in
Yeah.
you're not worried about your account being hacked, your
Yeah.
coins being taken from you, and all that kind of
Yeah.
stuff. So it does open it to a much, much wider audience. But I'm wondering how much of that audience will be institutional, or will it all be retail suckers that
I
will.
I think honestly, if I listen over the narrative of the last 2-3 years, I think that Bitcoin itself is there to stay for longer.
No,
Yeah, because the narrative is now in such a way that it is considered kind of as gold.
yeah, I mean,
Yeah.
these
So
guys would not put in an ETF unless they see it going to
yes.
be there for at least 10 years. So
Yeah,
let's give it
and
a
what I
10 year.
think will happen is that many retail investors will start just dollar cost averaging now.
Yeah,
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 and that's what will be happening. So I can see the narrative for 100K, but I can also see a narrative for 5K. Yeah, so
yeah. But
that's why now not my P2K. And we had also Carlos asking a question about it, like what's our opinion about the Bitcoin ETF? So I think generally it's good that there's an ETF. It's of course an irony, right? This whole Bitcoin and everything exists against the bankers and
yeah,
all of and the rich people and everything, and now it's getting to some extent controlled by BlackRock. Yeah,
yeah.
so that's kind of what it comes down to. So for me, that's quite an irony. Yeah,
It
and
would
then
it would
yeah,
be it would be interesting to hear Bitcoin extremists or purists, Bitcoin pioneers, for
yeah,
example.
yeah, 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 exactly.
What do they think on this? Because I don't know if they would be too enthused by this. Basically, because of what you said, they are now essentially controlled by the institutions that they were set up to take down or to take on or to go against.
Exactly. Yeah. Yeah. So for me, that's very interesting. And we had also Digital Needle asking a question here, like, will can the reward system we see in the crypto space, around staking, translate to the new crypto ETF context? So for people that don't know what staking is, it's a process where individuals can really lock their cryptocurrency to effectively support the security and the operation of a blockchain network. Yeah, and sometimes, for instance, they get some coins in relation in return for that,
Yeah,
and therefore see it as a reward and grow their investments. Let's say.
yeah,
So I really don't know if this is how this would be possible. Probably if this is something that is interesting already, then I can see that they will try it. But I'm not an expert in this field to have a solid opinion on this.
yeah,
But yeah, hey, I think we will see many people treating this like gold. Put in the portfolio, put like 2-3% or 5% in such an ETF, just dollar cost averaging. If it goes to 500K in let's say in 5 years, then you didn't miss the boat. If it stays here, then your 5% will stay. It
yeah,
will become 3 or 4%, but otherwise your 5% might become 30%. Yeah, so I think that's probably the thinking for many. I just hope really that people don't get to buy this out of the fear of missing out,
yeah,
because you really can't borrow conviction when it goes down.
yeah, 100%. But look, on the flip side, I'm kind of glad there's a safer way to invest in this for
Yes,
people,
definitely,
because
definitely.
there's nothing worse than having FOMO and following the news and following these influencers and people pushing these
Yeah, yeah,
exchanges.
yeah,
You buy,
exactly.
you buy Bitcoin and then someone manages to take it all away and you lose your money. You don't wish that on anyone. So it's a
Yeah.
safer way. And now also BlackRock can control the price a little bit. So maybe it might start to steady it a little bit.
I think they will start implementing ESG requirements on this. That they say like, those data centers need to have solar panels or something, something like that.
They're going to need some big solar panels. Let's put it
Yeah.
that way.
Can you imagine, like, yeah, but we know that the whole blockchain network doesn't even work like that. But we also know that those people that are really mining those coins as really as an investment, they have really sometimes huge server parks. BlackRock controls a lot, as we know. We see that from the annual reports. But hey, enough about Bitcoin, because this is not the Bitcoin talk. This is dividend talk. And just one thing then, because two iconic dividend stocks, and I know people don't look at at them like that. They call them growth stocks. But for what it's worth, Microsoft overtook Apple on Thursday briefly as the largest company in the world, the most valuable company in the world, which is amazing. And I think it's really deserved. I think Microsoft has more businesses on fire than Apple, and but Apple will come back. I'm not concerned about that. Apple is, but it's nice to see them head to head, because in the days when we were growing up, you were either a Windows fan or an Apple MacBook fan. Yeah,
Yeah.
and you hated each other.
Yeah.
These companies are so different now, but still the sentiment that I get when I see this in the news.
Yeah, and they're
So
still 1 and 2. Like you're talking about Apple. Apple will come back like like they're on the
yeah,
way
yeah.
down. The number 2 in the world.
Yeah,
So
but can you remember the office conversation still 20 years ago, like about MacBook versus Windows? I don't hear it too much anymore, right? But at the
not
time, it was like fundamentalism almost.
not with laptops, but you hear it with phones now. It's
Yeah,
more
yeah, yeah,
phones. Apple,
yeah.
Apple or Android or
Google, yeah,
Windows based. Yeah. So it's yeah. Look, it's interesting, and I'm not surprised. Look, Microsoft have been killing it the last
yeah,
last 5 years, so I'm not surprised. But like you said, Apple, they're still number 2, so it's not a bad place to be either.
yeah, yeah. True.
Um, Dividend hikes. We move on to dividend hikes. It's been a slow start to the year, hasn't it? I
Yeah, but
can't.
we'll get soon a whole shower of European companies. I
Yeah,
think the typical Swiss pharma companies will report in the end of January, first week of February. So that's when the real dividend hikes for European companies start kicking in.
yeah.
But we'll get there. We'll get there.
We get there. We just need patience. But
Yeah.
we had one. Enterprise Products Partners (LP) hikes their dividend by only 3%. And I can think of another one actually. BlackRock increased the dividend to 2%, which I know a
Yeah,
lot of people were disappointed about on
yeah.
that front. But yeah,
Well,
not
they just started an ETF for Bitcoins, so they
they
they,
needed the
they
cash.
think, yeah,
They
they
need.
think the earnings are much more, how is it, volatile now.
So I think that's a nice bridge then into our main topic, and I want to ask you, how are you feeling? Talk to me. Talk to me. Tell me, why are you
Yeah,
finding
so
it
what I'm
difficult?
struggling with, like, already for 2 3 weeks, that I'm looking at my screeners, and you know, I don't see anything that I really easily can buy, and I have, last year we had the bank going down, this SVB bank and Silicon Valley Bank going down, insurance stocks. Oh, kept me busy for a few months, right?
Yeah, yeah,
Pharma was in between, as well. At the time, and then we get also the real estate investment trust during the summer. So it was like a shopping spree all year long, right? And quite concentrated in those industries. But then we had Texas Instruments going down and such. And at the moment, like it only went up over the last 6 months, 6 weeks. I'm bloody price anchored because you could argue like Agree Realty is still a good deal, but I bought already so much of it, and I've got my rules in place that I don't want to buy too aggressively because sometimes you just don't know. Yeah, you need to learn more about the company. You did a full analysis about them, so I feel quite comfortable with them. But I also learned just to stick to my rules. So you start to look at some others, and it's just bloody difficult at the moment to find something. And I have a valuation mindset as well. I don't want to overpay.
yeah,
I don't mind paying a fair price, but I don't want to overpay like 30 40% just because it's a great brand, and then, oh yeah, and 10 years from now it doesn't really matter if you bought it now or not.
yeah.
Well, it does matter to me. Yeah.
No, of course, valuation matters, but
So it is really hard at the moment. Also, I think it has to do with just being after my how is it, my summary of the year. I still need to publish the annual report. I think this week I will be too busy, but maybe the week after I can publish it still before the end of the January.
yeah,
So you did all the math, you look at the numbers, you're quite proud, I must say, right? How things went. So you're wishing only to yourself another year like 2023. So, and then you think like, oh, and the price anchoring, and it just demotivates. It's really tough at the moment.
and is that with companies within your portfolio, or are you trying to expand because you're
Uh,
price anchored?
I,
Are you trying to look at
yeah,
something else that you're not price anchored to, like a company that you didn't look at last year?
yes, I noticed myself shifting to it, but I don't want to necessarily. I always want to buy good businesses, so I've got kind of my list of stocks
Yeah,
that I regularly look at. But there's still so much I want to buy from certain stocks in my portfolio, and I also look at my fair value calculations. But that's what I mentioned. I could buy more, let's say, Agree Realty, but I got now my rule kicked in. I've been buying too much. Yeah.
yeah,
So those companies that I've been buying a lot in 2023, they reach certain values that I now want my thesis to play out before I stash even more money to it.
yeah,
Yeah, like Texas Instruments. I also bought quite a lot from it. T. Rowe Price, it's like a 60 70% position. I wanted to play out now more. Yeah, because I might be wrong. I
yeah.
always consider that what my thesis is, that it might be wrong, and then I don't want to be impacted too much. So yeah, this is what I'm struggling now with. So I start to look at other stocks, and then all the other stocks I think like, oh, too expensive, no, too expensive, and uh,
So
yeah,
do you find yourself getting a little bit impatient and having that little naughty man on your shoulder telling you to break your rules? Like is
yeah, exactly.
so
That's
so
exactly.
so how are you like how are you managing that? How are you staying so disciplined? What's keeping you from pulling the trigger?
I
I'm buying more. That's
yeah. I don't know. I don't know. I just have been telling to myself over the last 9 years, don't make those stupid mistakes anymore that you did in the past. Stick to your rules, stick to your learnings, and only improve them, fine tune them further based on new mistakes. And I know if I just start to buy everything now, then I'm buying out of impatience. Yeah, it's like, so I've got another rule. I never go to the supermarket when I'm hungry, and if I don't want to spend too much, I don't take, how do you say it's such a little carriage into the shop.
Yeah.
I always make sure that I only can carry it with two hands.
Yeah.
It means that I know that I don't buy stuff that I don't need. Yeah. So this is kind of the same with the stock market to me.
Yeah, it is, but the stock market is always available. You don't have the luxury of just carrying stuff with two hands. You have everything still available. So how do you like? It's amazing how you can still be so disciplined even if you have that impatience. But I mean, do you feel there's
Yeah,
pressure? I
I
mean,
guess
do you,
I really just want to become financially independent. That motivation is so much bigger, I think, than anything else.
yeah, and do you think there's too much pressure to buy every month or every week? What like the
Well,
problem?
I need to be according to my plan, and that's where it comes into the squeeze. Yeah, because my plan is to do dollar cost averaging. Because I learned that piling up money doesn't really matter because the stock market may be much higher again going forward. Because
Yeah,
I was thinking really already when I started in 2014, oh, this market is overvalued. I've been feeling that till 2020 for 6 years that the stock market is overvalued. Yeah, so I had to learn that it's a market of stocks, and there's always something to find. So I bought something this week. I added a little bit more to an existing position. I saw that was around fair value. So I thought, okay, let's just do it. I need to spend my money. It's a solid business, so let's just do it. Yeah. But it is like really like it's like you open up the fridge and you feel like, oh, there's nothing to eat. Yeah. You know this feeling, and then you want to order and you think like, no, I need to save this money, or no, I don't have money to order, I don't have time to order, whatever. And you just look at your food and you think like, oh my god, I know that I'll be eating this without any pleasure. Yeah, and that but I know it is still healthy to me, I know it's good for me, but I just don't feel like it.
yeah.
Yeah. So that's kind of how my buying was this week.
And be honest now, when you were buying that, did you feel like you had to do it? Like if we're in go back
Yeah,
to
I felt I
October,
had to do it. I felt I had to do it now. Yeah.
and are you happy about it?
Yeah.
Yeah,
Yeah. I'm happy that I did it. Yeah. Because the money is gone. So it is invested in a solid stock with solid fundamentals, solid fair value price, solid yield. It all matches my plan.
yeah. It's just
So, yeah.
it's just so funny when I'm listening to it, because you're talking on one hand, your learnings have always stay invested in dollar cost averaging up or down, whichever the case may be, and you have the opposite feeling now where there's nothing in the market that you want to buy, even though you know that there's always something on sale.
But
So
investing is psychology.
of
So what
100%.
I feel is that over the years I got more self-aware, and that's why I wanted to really discuss with you
Yeah,
on this topic on the episode. I want to show that it's not just a formula, that even if we write about things, about how to approach things, it doesn't mean that we don't have a weak day. It doesn't mean that we have weaknesses, or that we have these kinds of FOMO as well at times, right? So it's the human part that often doesn't get discussed also in social media and other podcasts. It's often very about the numbers, the metrics, because it makes it easier for us. But the psychology is where the real toughness is. And I'm experiencing just these 2 weeks, because I saw I didn't buy anything since 19 December. Yeah. So, but I bought in 19 December. So I spent my money in December.
yeah,
But, it's 3 to 4 weeks ago. Before you know, it's the end of January. Yeah, which is like 6 weeks. I could still say like, oh, I bought something in January if I did on the 31st.
yeah.
Yeah, but it's still really this cadence that I know I need to do. It's just my learnings, it's my plan. I need to do it. Yeah, but it's so bloody damn hard. Yeah.
It's the discipline behind that I find really interesting, because look, I've known you as a person for quite some time now, and I know how disciplined and how structured and how you operate like that, and it's probably easier for someone like you to stay disciplined than maybe someone with a lot more impulses.
Mhm.
So I could only imagine someone that doesn't have that discipline, feeling what you're feeling now, would just look at the rule book, crumple it up, throw it in the bin, and just buy anyway. So it's I don't know. I think it's really good that you can stay that disciplined, but I don't understand how when you're feeling like that. Because honestly, I wouldn't if I had the same feeling as you, which I don't. I
Mhm.
don't know if I could stay as disciplined in that moment.
Okay, so maybe I need to go lie on the couch now, and you can ask me about my daddy issues or something like that.
Yes. Yeah.
But yeah, no, it's just how I work. I don't know why. I think the motivation is just really reaching financial independence,
Yeah.
more than retire early. I would say just knowing that I need to stick to my plan, and also, it gets all the time confirmed when I do my annual reports that I'm now doing, and this will be the fourth time. It just gets confirmed how important it is. So why would I stop doing that if I then risk? I don't know if we have that, but I guess to some extent it's more like about addictive nature. If I know that if there's a bag of candy in the house, it's gone at the end of the evening. Yeah, so just don't buy candy.
Yeah.
Yeah,
Yeah.
so you try to avoid yourself getting in those situations, and I guess that's maybe where the discipline comes from. That I'm a bit more extreme in all these kinds of things, because I know if I do, let's say, one step or two steps, I know I will be quickly in a space where I will regret, and then it's so hard to get out of that. It's so
Yeah.
hard to get, and I've learned this in my life over time that I need that. For me, I need to live in a black white world. If it becomes gray, it's really hard for me to navigate there.
Yeah.
So
Yeah. It's quite interesting. I'm a little bit different to that. I mean, I do have a huge sweet tooth with candy, but you could put it in front of me, and if I don't want to eat it, or if I set myself a goal to say, do not eat that for 1 year, I will not eat it. I
oh
can.
no, I won't be. It will be looking at me. It will be like talking to me. It will say like eat me. Yeah, and how can you not eat such a sweet candy then?
Yeah.
I mean, yeah, but I think this is what it comes down to, right? In investing, and we often speak about that, like you need to find a style that matches your character.
Mm.
Yeah, and how is it? And because it's so much about psychology, I mean, forget about all the screener criteria and everything. They don't matter anything if you can't deal with your own psychology in the as an investor.
Yeah, but I think part of it is this year. It's been. I don't know if you feel the same, but it feels to me like it's a really slow start to the year. I mean, there's not much
It's
news
a
happening.
very boring start.
Yeah,
Oof.
there's not much. This time last year, I remember we were still talking about the war in Ukraine. There was still lots
Yeah,
happening. There was lots of news. There was lots of things coming out.
yeah,
Um, Apart from this Bitcoin ETF that I have no interest in, like it's hard to. It's yeah, it's been a slow month, and I'm struggling to see it because I know we're getting asked questions: what sectors, what stocks do we see are undervalued, or what's going to? But I don't see a clear trend or a path at the moment.
me neither.
There's nothing sticking out to me, and over the last, maybe we're spoiled since COVID, but I
Yeah,
know since COVID, nearly by the second or third week of January, you could
yeah,
nearly spot where the trend was
yeah,
happening. So
yeah.
we were spoiled the last 2 or 3 years. That's a problem.
Yeah, and then we're long-term investors. And 6, 7 weeks ago, we were in the candy store, literally, right, buying everything we could see.
Yeah,
And then suddenly there came a run up, and now we are here, half depressed, looking at our portfolios. There's nothing to buy. It's like maybe we're like drug addicts, right? Like 2 weeks, no buying, and we get these, how do you call this? These relapse? No, not relapse, but that you're recovering. These fears that you start sweating, and how
yeah.
do you call that?
It's like a relapse, is it? When you're yeah,
Or kick off, we say in Dutch, kicking off of the drugs, let's say. You get all these experiences. So yeah, maybe that's just it. Money needs to work for me. Money needs to flow. Money needs to work for
yeah,
me, right?
yeah. So you're going to do anything different then for the rest of the month, or is your mind going to be at ease
No, I
when?
just spend so much more time looking at what I want to buy.
Yeah,
In the past it was like a minute or two, pats, pats, pats. When the money came up my account, da 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 da. And now I'm just looking at my portfolio. I'm looking at my fair value assessments, and I'm thinking like this one, like I'm watching at this fridge. This is kind of full, but all kind of food that I don't want to eat, with leftover food, a bit here,
yeah,
something that my wife bought that I know I will never eat, this kind of stuff.
yeah,
That's how I feel now, that I'm looking here, but I'm hungry.
yeah.
Yeah.
Yeah, I get you. I get you. But the price anchoring is. I mean, it's quite funny when we look back. We were spoiled for choice in October, November. January is quite different. But I'm on the other end of the spectrum, and I tell you why, because I want to get to that 100,000. And I don't,
Ah,
and the quickest way for me to get there is if the market goes up more. So I have the opposite feeling. I'm a little bit more excited seeing it going up. Yes, and there's also some companies in my portfolio that are still
yeah.
evenly priced. I bought some more. I hold Vici is obviously still on my radar as well, and EOG Resources. There's a couple of companies there that I feel that are good value. So I just don't have this feeling. I do have the feeling that it's quite boring, that there's nothing happening, there's not much news. Um, but I still, as you said, it's a market of stocks, and there's always something there.
Yeah. Yeah. Well, lucky you. Lucky you. And next time when you are experiencing this, we do an episode about it.
Yes,
And I want
yes,
to know about your daddy issues.
yes. Okay, let's do that.
Awesome.
Yeah,
Hey, thanks for hearing me out on this one, Derek. It's been really a tough one, and I know I'm not alone because few people approach me on
yeah,
this as well, and it's just like where the market is now. In the Netherlands, there's also expression. It's like how is it? Quiet or silence before the storm.
yeah,
Yeah, and we're just on the brink of annual reports. I'm sure there will be a few companies that will, according to Wall Street, disappoint, but fundamentally be very solid. So there will be opportunities there
yeah,
that are in the value trap. So I just need to sit it out for 2-3 weeks more. I still need to make one purchase this week because, of course, I didn't want to blow all my money up this week on this stock that I bought. But the second one, I hope in 1 or 2 weeks, maybe giving me more
yeah,
joy.
yeah. I think it's good. I think it's good to see that you are human. First of all, you have all these human emotions, but you don't just talk the talk, because it's easy to sit behind a computer and say, "I have these rules, follow these rules," and I never feel any different. So
Yeah,
it's good to
yeah,
show you
that's good.
you walk the walk as well. So no, good chat. I'm happy. I'm here to listen to you anytime. Any more issues, you know where I am.
Ah, awesome. But hey, but this may be a really great bridge to the first listeners question, right? As well, because it's the time of the show already again. Time goes quick. But Simon Nurek was asking, like, how many trades do you usually make per month? And do you ever take into consideration the current allocation of currencies in your portfolio? Sometimes feeling like adding more dividends to a certain currency. So, I usually make between 1 to 4 trades. It really depends on how the sizing of my purchases. And nowadays, I don't really look anymore to the currency. I did a bit more in the beginning because I've learned that if I just focus on the stocks that I want to buy, that naturally my currency is well diversified because it's a nice mix of European and US stocks and English stocks by now that I feel totally fine with this. But in the beginning, I was mainly buying USD, American, and then I had this more.
Yeah, yeah. I have a nice balance as well. I don't know. I haven't tracked it so much. I used to track it. It was nearly 50-50 at one stage. I'm pretty sure it's tipped more in the USD favor right now. But sometimes it comes into my mind, if I'm buying just US stocks, I think, oh, wait a minute. I need to get some. I need to have some more European exposure. So, but I like the balance I have. I've a couple of UK
Nice.
stocks, a couple of UK, a couple of European, and a couple of American. But I still think there's lots of potential in the UK market that we're just not looking at the moment as well. So that might be one I might look a little bit more at this year, but I don't know.
Yeah, one of the goals that I have is to learn a little bit more about the investment trusts in the UK. There seems to be hundreds of them, and some of them are also iconic dividend growers. So
Yeah,
I'm quite interested to learn a bit more about them. I reached out to someone, also the specialist in that, maybe one time as a guest on the show. It was suggested by one of our followers, so maybe that would be a nice occasion then.
yeah. Money Matters is a podcast I listen to, and I
Yeah,
don't.
I think this is the guy that I reached out to.
Yeah,
Yeah.
yeah. I'm not sure. I'm not sure he come on to our show, but I mean, he's very knowledgeable. It's a great podcast if you're looking to learn, because what he does is he doesn't just talk. He gets investment trust managers, the actual managers of these trusts, and he has one on every week, and gives
Mhm.
you a unique perspective into what they're thinking, why they're buying what they're buying, why they're doing what they're doing with the strategy. And he doesn't just sit there and, to be fair, he's a bit like Brad Thomas in terms of he knows all the CEOs, he knows all them, but he doesn't go easy on him either. He'll ask him the hard questions and ask him
Nice.
what they're doing, particularly when it was the interest rates going up. So definitely worth checking out. But there's lots of interesting ones there as well. And I know from an Irish perspective, it's taxed more favorably than ETFs. So yeah, I might let you do a little bit more work in this and then siphon off your learnings.
Awesome. Awesome.
Okay, we've got a couple of questions that are tied together. So Marek and then Dividend, just a German name after that. So we'll just go, it's German dividends. But they're asking us, are we diversifying our portfolios beyond dividend growth stocks? We've heard about Bitcoin. We talk about growth stocks sometimes, value stocks, ETF or gold. Are you diversifying?
Not from a liquid portfolio point of view, but of course I am. When you look at my net worth, it's real estate. I've got my wife, yeah,
Yeah.
my kids. All of them are generating passive income. Well, at least my wife is generating passive income. The rest is more like making sure that I don't need to overpay for when I'm retired for healthcare support. Yeah, or how do you call this? These daily nurseries. So no, but to be fair, I'm look, I am open-minded to other topics. I would love to buy like a real estate investment property or something like that, but just and Marek knows that our market here is not easy in near the capital. So it is a bit difficult, but gold and such not. No, what I did do is when the war with Ukraine broke out, I put some of my emergency fund money in US dollars because there was a big shock to the system and also to the zloty at the time. And I kept it like that on purpose here. But other than that, not. And yeah, I am open-minded to stocks that don't pay dividends. That's why PayPal became a holding of me late last year.
Yeah.
But not something to increase because I'm just simply focused on my plan, and my plan is tailored around dividend growth investing. So why bother about others? It's more like the joy of missing out, and yeah, and then even it doesn't really come to my mind either. Yes, so
Yeah.
I don't have these questions in my mind like oh I need to buy something else or going into gold. I had it at the beginning of my journey, but not anymore.
Yeah. I mean, I think it's important to be open-minded. We are dividend growth investors, is what we talk about. It's what the podcast is about. But I still think it's important to be open-minded. And sometimes there's opportunities that, yeah, you have to look at and take. It doesn't mean we'll talk about
Yeah.
and discuss them. But at the moment, I'm all in on stocks and dividend stocks. I'm still in the
Yeah.
accumulation phase. I've only got so much money I can attribute to this each month, and I don't want to take away from something that I'm relatively comfortable knowing and understanding
Yeah.
and put a lot of time into something that I will need to start learning and watching again. So I don't have that need. I've mentioned 100 times on the show, real estate will be definitely something I'll do once I get to a certain position because my wife can be more involved and it's something we want to do. But at the moment, I'm all in on stocks.
Yeah, so I've been studying bonds not too long ago, a few weeks ago, when
Yeah,
this
we
was
had a show on it.
all around. So, and I was actually even really analyzing if there are some bonds that I want to own, but I felt like, no, then I would be investing for capital appreciation mostly with long duration bonds. Because for the rest, I just if you can buy NN Group for 8%, why bother about a bond for 5%?
Yeah. But I think we're different as investors in terms of we're actively managing them. We talk about them all the time. So our focus is on our portfolios pretty much every week. We have a whole show about it. Whereas I could imagine if you're just your average investor that doesn't listen to podcasts, just wants your money to work for you, you're not interested in reading, learning, talking about it all the time, it's probably good to have a few ETFs in gold, real estate, stocks, and have it diversified that way. At least then you're probably a little bit more immune to the shocks and you have a bit of a smoother ride. So I can see the value in it, but it's just not
Yeah,
for
and
me.
then you bring up a good point because we didn't, I said, talk so much about it yet. But how you said in what was show 177, we did ask this question right in the poll, like what type of investor are you? Now, just for your information, 25% of the listeners to the podcast that responded are pure dividend growth investors. The other 75% has a mix of strategies.
Yeah.
So it's also interesting for us to see if we should discuss a bit more other strategies also on our podcast, just to inform our listener more as well. So that's something we can maybe consider when we get together and lay out the scheme for the next of the for the rest of the year, right?
Yeah.
Um, um, so, but yeah, for me personally, it's exactly the same like you.
Yeah. And again, we got another couple of questions from Dino and Johnny, that roughly around the same. So Dino's asking us, have we considered concentrating our portfolio? So picking 10, 15 of our high conviction stocks and going with them. And then Johnny is asking us, do you guys expect to actively manage your portfolios personally until the very end? And if we both live to a ripe, healthy age, we still have another 40, 50 years ahead of us.
Yeah.
That's a lot of time to make mistakes.
Yeah, true. So for me, concentrating my portfolio is kind of concentrated. If you look at my top 10, they are the majority of the portfolio. Yeah. Um, no, so I've always had this system where I want to prevent that when my portfolio is kind of in this position, it's where it's getting now towards to, that a single dividend cut will not ruin my portfolio. And if you start doing to 10, 15%, it's very likely that you have holdings with a 10 to 15% dependency on dividend income. And even though it might be the best stock in the world, anything can happen at any moment to a business, which leads the business to cut the dividends. And I don't want to have that risk in my portfolio from that point of view. So it is true that the risk of having more than 10 to 15 positions when it comes to performance, and total return doesn't really matter if you buy more, if it's well diversified in those positions, but it does matter if you look at it from a dividend cutter's point of view. So that's not. And then about the actively management of the portfolio, that's the one that I've been thinking just throughout the last 2 years more often about, like, okay, what if I drop that now? Yeah, will my family be able to take it forward? Do they know what to do? And that's definitely a concern that I have, and I haven't got an answer to it yet. But it is something that pops up from time to time in my mind, and I know I need to do something about this.
Yeah.
Either via education or something else.
Yeah.
If anyone has an idea and went maybe through this phase, let me know.
Yeah, I think they're two very good questions. I know they're linked in. Why I wouldn't go down to 10 or 15 positions is I consider myself an average investor, like probably the majority of people, just an average investor. I'm relying on third party news most of the time, or what we read in annual reports. I don't back myself as a good enough investor to go 10, 15 stocks all in. That's all I'm having, because I make mistakes. I've made mistakes, and I'm going to continue to make mistakes. And that diversification, having 40 or 41 companies, gives me a little bit of leeway. I think at the moment my max position is 6% of my overall portfolio. So worst case scenario, that one goes bust. It's only 6% of my portfolio. If I have 10 stocks, that's a bigger weighting, and it's a bigger chunk of change for me to take. So that's why I wouldn't do that. Maybe if I get to 50 and I back myself a little bit more, maybe I will. But I honestly, I see myself as such an average investor that I think diversification is key, irregardless if I perform better or poorly. At the end of the day, I'm looking at my dividends coming in, not where the share price is. So once I see that going up, I'm quite happy. So, but it's an interesting question, isn't it? Because
yeah,
if you back yourself, if I was Warren Buffett, or if I was a super investor with all their contacts, all their information, yeah, 10 stocks I think would be perfectly fine. But
yeah, or one ETF.
Yeah, or one ETF. I'm just an average Joe. But Adrian has asked us, we go through so many annual reports. Do you know of any companies that do ESG right and properly engineer their transition to green, sustainable future while still growing dividends and managing the business?
So yes, and I'm going to give two companies, and I think he's probably looking more at the first company that I'm saying, and this is Siemens.
Yes.
Yep, and I think they're doing ESG right, and specifically, if you think also about environmentally, what I really like is that they are effectively creating products that are helping in the energy transition, windmills and everything. But also, if you look at the trams they build and such, they're really thoughtful about what needs to happen as part of the energy transition. And this is where I think where many companies go wrong. I don't understand why some companies don't see ESG and specifically the E, yeah, as an opportunity. I mean, think about it. If you can reduce, let's say, plastic waste as a company, I'm sure you will spend less as well. Yeah, if you, for instance, make lighter packaging or packaging that can break down, and because it's also good for your customer. Yeah, because often these kinds of environmental impacts are through the whole chain, but they shift them to the customer. Yeah. Okay. So yeah, well, we don't need to pay for plastic waste. No, the customers need to pay for plastic waste. But imagine that you're the first company that is making sure that the customers don't need to do that anymore. Yeah. How and you become really having this E at the forefront. I believe that you will actually build a lot of goodwill for people that are sensitive to this and actually build a more loyal customer base. So generally saying, I think ESG, if companies really take it to the heart, there's a lot of profitability in there. What ESG became, unfortunately, it became kind of a terrorism to produce as many pages you can in a glossy paper, tapping yourself on the chest how good you are for the world, but still having one after another fine coming up for all kinds of dodgy dealings here and there. Yeah, so we talk about ESG, but then the whole governance sucks, right? And they get away with it.
Yeah.
And this is where I'm really having an allergy for anything related to ESG. But I would say Siemens seems to do it really right. And the other one is I want to call out ASR, the insurance company. And then you may think like, what is ESG? What has ASR to do with ESG? We half a year ago we mentioned on the podcast where they wrote about their reflection on investing in in defense stocks. So we're talking about the S here of ESG, right? And I really loved their reflection that it wasn't not like, oh, defense stocks are bad. No, actually, upon further consideration, we believe that a country has the right to defend itself. Yeah, but how do you then invest in defense stocks? They came to the conclusion that they will buy I said bonds from governments where the bonds and the money that they're collecting is designated to buy, for instance, army equipment. Yeah, but only then from those countries where they feel they are doing it for the right purposes, to defend itself, not to attack and oppress others. And I found this so inspiring to read this from ASR, so thoughtful that I felt like, hey, this is ESG done well. Yeah, you protect both the investor, the shareholder that you have. You make a very thoughtful decision. You're not giving into the kind of very left side of the political spectrum because it is and it was maybe popular in a certain moment of time. And I really like that. So for me, those two companies, they really stood out from what I've been reading over the last 2 to 3 years.
Okay, nice. Two good examples. Jacob has asked us about tax on dividends. How much is too much for you to be interested?
If it's much more than capital gain tax.
Yeah.
Because if it would be, and in Poland, it's equal. It's the same. So it doesn't really matter. But then dividend investing is much more favorable because I don't need to worry about selling some of my great businesses. But let's say if it would be like 30%, like for everything, right? Then then it's a 10% different. Then it starts to be really mattering, right? But I do look at for those companies, because you could say at Switzerland, I look at yield after tax. But I can do that because it's just a small part of my portfolio. And you typically see that countries with such high tax rates, there's usually already something priced in their stock market that they trade at lower multiples.
Yeah.
So, yeah.
Yeah. If it gets higher than my income tax, then I'm definitely out. I don't want to pay more than my income tax. Jack has asked us about value investing he's thinking about lately. So he's saying, how do you differentiate between short-term periods of turmoil that present buying opportunities and pivotal long-term declines in companies? So let's think about Walgreens, VFC, medical properties. How do you know who's going to pull through and who's not going to pull through? It's quite an interesting question, isn't it? Because it's sometimes it's hard to know. But if you look at Walgreens and VFC as examples, you could see everything was declining. Like even the underlying business sales was dropping, cash flow was going down, revenue was going down, customers were giving out. You could see, and similar with VFC, you could see every metric was growing. There was nothing underlying to say that this is short term. It was always going to be a long term thing. So I think you just have to look at the financials, look at the trends, look at the growth prospects. I'm thinking of ASM L when they went through a little period, but you could see their sales was dropping, but their order book was going up because remember they had this chip crisis. So you could see that was short term turmoil rather than a long term declining company. So I think it's I don't think you can do it in a one case fits all. I think it's definitely case by case. But you definitely have to see what the underlying growth of the company is. Is the growth still there? And unfortunately, with Walgreens and VFC, it wasn't. But ASML did have it at that time, and I think that's the key fundamental difference for me.
Yes, I'm just sticking to my dividend safety analysis that we also did with for the premium subscribers. If it is going into questionable territory, it means for me like reconsideration. Usually you're then still early enough that you're still getting a decent price for it, often not even at a loss. So why would you want to have companies in your portfolio where the dividend isn't safe?
Yeah.
So I'm a buy and hold investor, but it's more like a buy with an intention to hold. I don't need to wait until the dividend cut happened. And this, by the way, really nice bridge also to the question we had for the last episode, which was like, what do you typically do after a dividend cut? So it's interesting. 17% of our respondents, they directly sell. Another 15% hold or wait for a recovery. And then 68% does first analyze and then decide. I'm also part of that camp here, but that's how I look at it. So about buying opportunities, I burned myself too much, Jack. I often give the example of Tupperware. I really thought like Indonesian women would all have Tupperware parties and pull this company out of trouble. Yeah, and if I hear myself saying this, I mean, it just shows you that the CEO got me there, that he spoke to my feelings, and that I went into it. But this company was just not good enough, and you saw the same with Walgreens and such. So it was up in the air, and don't fall in love with companies, and ask yourself the questions: how many turnaround plays do you want in your portfolio? People that listen now for 4 years to our podcast, they know that we're often making jokes about turnaround plays because we have burned ourselves enough on this. So I want to keep those to a minimum.
Yeah, and I have to say, Walgreens, VFC, they weren't short-term periods of turmoil. I mean, we look at Walgreens; that's been in decline for 3-4 years. That's not short.
Exactly.
It's not 1 quarter, 12 months. It's over an extended period. So there was plenty of time there to spot the difference.
And you saw the same with AT&T at the time.
Yeah.
And while the dividend cut at the time came at a surprise, because the CEO still mentioned like, no, dividend is safe. At the time. But you could see that the company was struggling already for quite some years, cord cutting and such. But often they hit to our screeners for the first time when they are in trouble, but we don't know, we haven't been following them yet for 3-4 years. So an investor that has been following them, they will say like, oh, stay away. But we might think like, I don't carry your luggage. You might not be objective. Look at this. Value. And they say, no, it's a value trap. Oh, come on. So that's the hard part of investing. Who's right? Time will tell.
Time has the answer to everything. Arca Diaz has asked us, what sector is the easiest to understand on content for financial reports? I think consumer staples is a no-brainer. I mean, you just have to walk into your stores, your local stores, look at what they sell, what they do. You can usually get a feeling for the culture there, from how the staff act and so on. So I think consumer staples. And again, look, it's something we all need and use, and everybody needs to eat. Everybody needs to go grocery shopping. So I think consumer staples is...
I find also mature information technology stocks like Microsoft really easy to
because they're easy to understand. And if I was to go to the other side of it, which ones are harder? I think healthcare and finance are particularly
finance is really hard.
It's so
Yeah.
broad. But
Yeah,
healthcare,
but even insurance stocks and banks, they don't read easy. Oil
no,
and gas also not,
no,
also not easy.
no. And healthcare, because sometimes you need a degree in pharmacy or you need a degree
Yeah,
in science to understand
yeah,
what they're doing. So I find them hard, but I think, look, if you're looking the easiest to understand, you can't go wrong with consumer
yeah,
staples.
true that.
Jeremy has asked us, are there any stock sectors, countries you would not invest in? Um,
For me, it's tobacco because I agreed there with my wife. But for the rest, I can invest in. Oh, by the way, banks.
hey,
I'm not going to invest in
I
banks.
was
Oh,
waiting.
come on.
I was waiting for you to say that, but maybe Canadian banks will change your mind because they seem to be different to the rest.
Yeah, they say so.
Yeah, yeah. Um, for me, I've no stock sectors that I avoid. Countries wise, I stick to Europe, the US. I don't really
Yeah,
want to go out east. I'm
true.
more comfortable staying in my own lane this way. So
Yeah, yeah. It's a bit like One Up on Wall Street, right? Buy what you know.
yeah. Andrew has asked us, have you ever looked into Aswat Domadon's free valuation financial classes?
Yes, they are awesome. Go there, Andy. I would heavily advise. And by the way, they are already on YouTube. I know that he
Yeah,
does
they're on
every
YouTube.
time a new semester. I've been. I mean, I had a time that I was that like 10 or 15 in a month or 6 weeks. I was just every time when I was walking somewhere, put it on my head. I come home, look at the Excel sheet that he had or something like that. They're just really solid, really good. You can learn a lot from it.
Yeah, yeah.
I can highly recommend them.
Yeah, I have his little book evaluation as well. It's quite good. I could
Yeah,
recommend that too. Awesome
nice.
guy. Dara has asked us about trading 212. Apparently, they have a lot of new updates. So are they now a competitor to the big top dogs?
Yeah, because he's also mentioning here that you are finally able to transfer shares from one broker to another, which wasn't available before. I mean, trading 212 for me is always a bit they have this pie investing, really nice user interface and such. So it's always been a little bit of a sandbox for me. I haven't changed my mind yet on that. It's not really yet where I would like to store the majority of my wealth of the portfolio, but it's a nice sandbox to play a bit around. I've got my Noble 30 Pi there, but I don't expect it to come too big anytime soon. If you tell me about a broker that gives dividend vouchers, tax vouchers for free, automatically downloaded at a broker, and they don't have, for instance, monthly maintenance fee or and so still competitive pricing, that's the broker that I want to be at.
Hmm.
So still interactive brokers and the Geo are not offering me these dividend tax vouchers because then the reclaim process is much more easier. That's what I want. That's what I need. And if trading 212 is not offering that yet, then it's also still for me like, okay, not giving me this competitive advantage of why
Yeah,
I should be there.
yeah. But I tell you what I do like about trading 212. When you get a dividend, they send you a
Ah, the
notification.
notification.
It pops up on your
Ping.
phone, ping.
Yes.
Got it. No other company does that for me. Interactive brokers, the
Yeah.
hero, do not do that for me. So
Yeah.
I
The
wish,
kaching.
yeah,
Yeah.
I wish they did because it's actually a good feature.
It's
But
so motivating. Like I'm in a meeting at work, and then I see my phone lighting up, and I see like, oh, I received like I don't know,
yeah,
few dollars of dividend. I
yeah.
feel like,
So
nice.
I do quite enjoy that. But I don't know if you get the same feeling. But I'm not the best person to answer that. But I feel like my money's safer in interactive brokers.
Yes,
I feel
I have
like
the same.
the bigger and more established. So I feel
Yes,
safer with them. And
I have the same.
I see trading 212 more. Gimmick is probably a too strong a word, but when I'm putting money in there, it's normally into pies or it's. I feel like it's play money. I don't feel like it's my real investing
Yeah,
money. In
but
fact,
it's ideal for beginners. I would say it's
oh,
all
100%.
set up like that. Yeah,
100%. Yeah,
yeah.
100%. Javier has asked us, let's talk about alternative means of passive income. What about savings currently offered in Revolut? Do you use peer to peer, for example?
No, no. I do have some savings in Revolut. But again, just to try it out, I'm still more of the traditional bank. While I would love to move away from that, but Revolut has also not a spotless,
No.
how is it, branding. So I use it on a daily basis continuously to pay and everything, Revolut. I I I don't feel like putting lots of money on there.
Yeah, I use it the exact. So if I'm going out or if I'm doing something, I'll put money
Yeah.
on my Revolut, bring my Revolut card.
It automatically tops up for me. Yeah.
So I don't have that.
Okay.
I only put it on when I want to use it and use
Yeah.
that. But what I struggle with, I don't know where I'm making money from. I don't.
Yeah, that's what I struggle with as well. It's a little bit of lack of transparency, I would say, because for my bank, you can just look up the annual report and you know it. You know where they are scamming you.
Yes,
Yeah.
yeah, you can see they're scamming you. But I mean,
Yeah.
they have a sustainable business. They have to make money somewhere, and they're not
Yeah.
making it off me with banking because everything is free that
Yeah.
I'm doing transfer
Yeah.
money. So I'm not paying for their
And I
premium
don't mind to pay
cards.
for banking. Yeah, actually, because I don't know if you have that. I think it's normal that you pay for a service. Yeah, you pay also for fuel. Yeah, you pay for a lot of things. So I don't mind paying for banking, but I mind paying for. I mind when I feel I'm being scammed. Yeah,
Yeah,
like a big spread on the US dollar zloty exchange rate, while you know that anywhere else you can get it for a fraction of what you pay there, and you know they don't need to do anything for it because the whole IT system is easily set up. It's commodity.
yeah,
Yeah, that's where I get angry on traditional banks. Yeah, but then at least if Revolut could be more transparent, saying this is how we earn money. Yeah, that could increase my confidence in them.
yeah, yeah. I remember when I had my cafe and credit card companies were coming
Yeah.
in, and the sales guy there was doing his masters in finance at the time.
Mhm.
And his thesis was on companies like N2 and Revolut.
Ah,
And look, I'm not an expert in this in any means, but like he was saying that the business models as it was at that time, that's probably before COVID,
yeah,
2018, around that time, was not sustainable. Now, obviously,
yeah,
they've lasted 5 years since then, but in his mind, he couldn't see it, and that kind of stuck with me. And
yeah.
maybe I'm anchored with that. But what about peer-to-peer lending, or have you ever tried that?
No, no, and I was speaking with someone. No, we were on the podcast,
It
man,
was
the
it was
live show.
it was
Yeah,
on it was afterwards. We
yeah,
stayed around and chatted
yeah.
with some of the
Yeah, no,
investors.
I've never tried it and never. Well, I've looked it up once, right, to check because the yields sound so amazing, but I felt like, nah, not for me. I
Yeah,
mean, why bother with having 500 euro there, 500 euro there? Before you know it, you need to have 10 pages of G sheets to track where all your money is.
yeah. I tried it. I think Property Partners at the time in the UK, they were reputable. Reputable. There was a few companies around that. So I got in maybe 2016. I think I came completely out of it 2018, 19, around that time. There was maybe two or three companies within Europe. And I usually stuck to Europe because I
Yeah,
understand that better than American, but they were good. They like good reviews and good money, but I just felt it was unsafe. And like that, I wasn't comfortable putting in large amounts of money. I'd put in 500, 1,000 euro, but I wouldn't put 100,000 euro into something like that. So
yeah, yeah,
it just didn't sit right with me. And you could see then with the peer to peer in Property Partners, Brexit was starting to happen, and that market came under pressure, and there was a lot of risk. So I took out my money well before anything happened there. We got a question from Akira. They kind of missed the stock of the week part of the show. Do you consider bringing it back?
Well, not to disappoint you, Akira, but no, not really. First of all, our podcasts are already quite long. And secondly, we have now this premium subscription, and that's where we share our watch lists and everything, and where we also discuss more about stocks. And I think it's fair to our premium subscribers to keep it there.
Yeah.
So
Yeah, but what we will do is we will do some more deep dives. I think we've got that request a couple of times
yeah,
actually this week.
yeah,
So we'll try and incorporate more deep dives into it. But the stock of the week part, probably not so much. But you can get a feeling because we discussed lots of tickers, lots of stocks in the show.
exactly.
We're quite transparent on what we like and what we don't like. So
Yeah.
okay. Luis has asked us about an ETF with European dividend growers. It's called a Baelo Fund. Have you ever heard of them?
I never heard of it, but I opened it up and it was very, very interesting because it shows so many nice stocks on there. It's a mixture of European stocks and US stocks. So for me, it was a really, really nice discovery. And we'll put the ISIN number in the show notes, right?
Yeah.
But it has stocks like Chesnara that I own. Yeah. Legal in General, National Grid, Croda, Essilor, Rubis, Teleperformance. So really nice European stocks are in here, but then also Philip Morris as an
Yeah.
example. So very, very interesting, right?
It's
Very interesting.
it is very interesting. The companies in there are definitely caught my eye. But what I did notice as well is Luis put the creator, Antonio Rico, and he's on Twitter. I
Yeah.
wonder if, because I know it's a Spanish website and it's a
Yeah.
Spanish fund, but I wonder if he has good enough English that we could ask him on the show, because this would be really, really good to talk about.
Yeah, let's do it.
Let's ask.
Yeah, I will put the ISIN numbers in the show notes. I haven't looked at the performance. I don't know how many percent is just holdings because everything is in Spanish, so I can't translate it easy. But maybe he's someone that could explain that to us.
Yeah, but come on, you look at it. I was looking at half your portfolio. I was looking at the stocks in itself.
Yeah, but also there, the first quote that the person he's quoting is Geraldine Weiss.
Yeah.
And that I believe she wrote the book Dividends Don't Lie or something like that. So she's a female investor. How often do you see them? She was a really good investor. She wrote a book about it. She's kind of the godmother of dividend growth investing.
Yeah.
So to put the quote on the first page that you open with them is already for me like winning my heart. So
yeah. Well, it looks very, very. Look, if I was Spanish, it definitely seems more geared to Spanish residents in terms of it's even in their priorities. They're picking companies that have good tax rates for Spanish. So I think if you're Spanish, it's probably a no-brainer to look at this. It's a bit harder for us because we have to translate everything, but just look at them take our system. Looks awesome.
Yeah.
Anders has asked us about recycling stocks. Regarding the whole story of converting to electric vehicles and the need for chips and batteries, he gets to pick with ASML. However, in the future, we will need to recycle all these batteries. And he's asking us where would we look into a good play on this. So I have to say, last week I was asked about lithium company, and I mentioned my concerns was around recycling. Lithium wasn't available. I've since, and this is what I love about this community, I was pretty swiftly notified. My knowledge was outdated, and my college degree 10 years ago needs to be revisited because we do actually have the ability to recycle lithium, which I think is a big deal, because that would have been one of the reasons I would have stayed away from that company. So our companies that do lithium batteries. So yes, I was wrong. My knowledge was outdated, but I'm happy to be corrected. In terms of recycling stocks, I think you're right. I think it's probably a good idea to start looking. Where to look at, I don't know. As I said, my knowledge is outdated. I don't know enough about the companies involved, but I think it's a good time to start looking at these kind of companies, get a feeling for them, get to know the competitors and what's out there. He's mentioned two companies. I don't have to take us, but he's mentioned Tomra Systems in Norway and actually, I don't know how to pronounce that. A Finnish company. You give it a go, maybe.
I don't know.
Yeah, it's too hard to pronounce. But yeah, I think it's probably a good space to start looking into stuff like that, because with the needs for chips and batteries, recycling I think is going to be a key factor.
Yeah, on the too hard pile for me. I really need to sit down and start studying all of this. And I don't see that it's such a big opportunity that I feel that I need to spend the time studying on it. But I may be wrong.
Yeah, okay. Jean Christophe has asked us, what are your thoughts on American oil companies such as Chevron and ExxonMobil? He's struggling with his positions lately and consider selling them as they keep massively investing into oil. So I'm guessing he's probably more interested in the green revolution and moving into renewables.
Yeah, and he's also afraid that, for instance, like the European directive, stop selling cars by 2030, fuel cars and such, right? So it's really simple. I think the fact that we see an electrification of cars doesn't mean necessarily that oil demand will be declining. And because that's kind of the thing that I struggle often with. because if you look in oil and gas and where it's going, yeah, it's gas, for instance, is a transitory, how is it, an essential transitory energy source that helps the transition. Those companies are massive gas producers. Also Shell now, massive in gas. So, and we need this to make this transition, and it's even part of it. When you think about oil, this is a very Western European view. Go to India, China. They're still, China is still getting off of brown coal. Even in Poland here, we're still on brown coal. Yeah. So where they are, for instance, in Netherlands now having this directive that they need to go off the gas. Here we're still hoping that people in the neighborhood will get gas ovens. Yeah. So we see this when we drive on the road and such. We read the news. We need to get green, but we need to know that more people live outside of the Western Europe, let's say, and where there's still growth in a lot of these energy sources. So also, when you think about peak oil, we may be seeing it somewhere. We may have just had it behind us, but there's still so much money to be made here. And what I suspect that those companies will do is they will just buy the next one that finds the way to earn the money of it. Yeah. And so for me, it just fits in the mix of a portfolio. But if you are really into, let's say, if you're not a believer in oil, I'm a believer in oil and gas. I still think we need it a lot. Economy is still growing in emerging markets. They can't make easily the switch or jump here. They're still thinking about getting food on the plate. Yeah. So for me, there's still so much in there. But if you're really into the green, just don't invest in them indeed and sell them. You need to really, I said, own stocks that you believe in. And I think that's the most important. You need to have the conviction for the stocks. So if Jean-Christophe, if you feel that you don't have conviction for these companies, you shouldn't have them in your portfolio probably anymore. Or do more homework and try to get that conviction. But don't have stocks in your portfolio, specifically if there are larger positions, if you don't have the conviction for it. Because then when they go down, you will probably sell them at the fire sale at the bottom and you will regret afterwards. Then it's better to sell them now when they're at a nice valuation.
Yeah. It's hard to know. I know road users. I think the last time I looked, it could be far off. It was around 40% of the overall uses of oil, but that's not gas. Gas then is separate to that as well. So I mean, it's a complex thing. I don't know. Knowing renewable energy the way I do, it's not predictable. So there's still challenges ahead. I know there's directives there, but Europe has been late on their targets already. There was a target set for 2020. They were late on that, and they've added stuff.
Yeah, but when do you think we will see an electrical tanker
or an electrical plane, for example?
Yeah, but think about all the shipping that's happening. And now it needs to go via the south of Africa. How do you think this is being fueled? Yeah, and how many ships are there on there? So all I'm trying to say is like, this is a very, very long transition. I'm very supportive personally of this transition, but I'm neither naive in that sense. And I'm not saying that Jean-Christophe is naive, because he's asking here the question about, if it's more around this philosophy, and if we believe it's a good thing. Yeah, but what I'm trying to say is like, oil and gas will be still long there to say. And that's my position to this. And I believe they are so cash flow rich that they can buy themselves into what's next. And out of these big five, a few may not exist anymore after that. But there will be a 2 or 3 out of those 5 that will survive. Maybe not be the leader. Think about car industry. Tesla is now the clear dominant leader. But it doesn't mean that BMW suddenly is out of business.
Yeah.
There's enough share of the market for others to buy them into it.
Yeah. Martin has asked us about Johnson & Johnson. We haven't spoken about them in quite a while. What are your thoughts on their investor day back in December?
Yeah, so thanks, Martin, for bringing it to my attention. I wasn't even aware of it, to be fair. But look, just boring. That's the answer. Exactly what I expect from Johnson & Johnson. They're of course guiding 5 to 6% growth again. They are also, I said, in the medtech, expecting a doubling of their value of the pipeline. They expect 1/3 of sales to be generated by new products. These are just some of the highlights, right? They expect also to have 10 or more assets with a potential for peak sales of more than 5 billion. So, this just shows to me that they will probably keep hiking for 6% over the upcoming years their dividend. And they are now 61 years of consecutive hikes. I wouldn't be surprised if this company once hits 70 or 80, who knows, maybe even 100. I do think that they presented it easier than it is, because with the loss of the spin-off of the consumer health, they are now way more their business is way more risky to invest in, because you now need to study their pipeline effectively. And you just mentioned it's one of the hardest things to study, and in a pipeline are also a lot of misses. So let's see here, but yeah, so just what you would expect. Nothing, not like what I mentioned in the beginning of the episode about NN Group. No testosterone in here or anything. Just
Yeah.
simple, predictable growth. Almost too scary, like what General Electric had always.
Yeah.
But then we found out kind of that they were cooking the books to keep the numbers nice. Yeah.
Yeah.
So sometimes I think, like, is Johnson Johnson doing the same here? Because this clockwork is so perfect that it almost feels this is impossible.
Yeah. Salomon has asked us, do we have a strategy for healthcare? And he's given two tickers, ELV and UNH. And to my knowledge, they're both health insurance, as opposed to healthcare. So I find insurance companies tough in general, but health insurance even tougher to analyze. So I have no strategy in relation to healthcare insurance. Healthcare, as I mentioned, is a hard industry for me to analyze, to study. It's complex. So I tend to try and stick to the bigger ones, like the Johnson Johnson and AbbVie, are ones that are treating illnesses that I understand, like cancer or something like that, because I find that easier. I might not necessarily understand everything in the pipeline, but I understand the disease and what that means and the impact that has. So that's what I put in terms of healthcare insurance. They're a little bit in the too hard pile for me.
Yeah, and for me, I have all the time the association to what I hear from colleagues in the States about their premiums that they pay, how it's such a massive part of their monthly budget, and that some people just work because then they have healthcare insurance, as an example. For me, that is a sign that this market is ready for disruption.
Yeah.
Yeah, and you see this already with Mark Cuban now, what he's doing and such. This market is ready. I can't imagine that it won't get more regulation anytime soon, even with Democrats and Republicans. Yeah, and it's so ready for a disruptor. The money they ask, the premiums they ask. We know that if you're a relatively big insurance company, you can negotiate a lot, probably. There can be more market power there.
Yeah. And look, as a European, and this is one of the reasons, as a European,
we don't understand this.
I don't understand this. And that's why it's in the too hard. I have health insurance. My company pay for it. I don't think about it. It doesn't cross my mind unless I need to use it for something. But I just
exactly.
It's too hard for me. So question from Janssen. What is your take on LVMH?
That's a sneaky one to ask, because I'm writing the deep dive for this on the next newsletter, which will be released next weekend on the Sunday. So Janssen, I will not give my full take here, of course, on LVMH here. So, but it will be part of the newsletter. But of course, everyone knows this is a great company. Yeah,
but I'm so excited for this, because we always say this, great companies, but we never take the time to sit down and understand them and deep dive.
So that's the process that I will start now. So that for the next weekend.
So we'll see if they're a great company. I'm looking forward. I'm looking forward to it.
Awesome.
And then maybe the last question is from Hugo. What's with BMY? Lots of acquisitions. Is their solvency of the balance sheet in danger? The CEO said at a JPM healthcare conference, the dividend is safe, but is it?
Yeah, I've seen, I've saw the same interview, Hugo, and he sounded very convinced, yeah, about his own business. So I don't think the solvency is in danger. The cash flow is rich enough. Also, if you look at patent expiration, they'll be able to some of these smaller acquisitions they can do out of the running cash flow. But it's true that there will be more debt added. I think, Hugo, the luck here is that Bristol Myers is in a position that they can acquire this. Remember the Celgene acquisition. Ooh, that was really, in hindsight, a very, very good acquisition. Gave them lots of cash flow. So I think this company deserves a bit credit here for the acquisition spree, and the management, how they've been doing it, and that's how effectively I'm looking at it. But yeah, it's true. You don't know what will play out because they are buying pipeline. It doesn't mean that they are buying ready and established products. Yeah, let's see.
Yeah, let's see. Let's see. I know it was a company that you had high conviction on, so it'll be.
Yeah, I've got a full
interesting.
position. It's not a high position, a big position portfolio, but it is a full position, exactly where I want it to be.
Yeah.
A few percent of my portfolio maximum, and that's it.
Nice. Okay, thanks, guys. We did park quite some questions. We got a lot of questions. We'll try and revisit all of them. We definitely will revisit all of them. So
maybe it's good also to mention to the listeners, we get so many questions about tickers. So we answered today all the questions that are related to more like thinking, knowledge, but we still have like 10 questions which are about tickers. And in the preparation of the show, we can maybe do 3-4 companies to look into, because we don't just want to, if we never saw a company, just give an answer and making things up, right? So as an example, I had to now go into the G&G investor update. As such, it takes time. So just be aware that if you see already on social media that 4 or 5 other people ask about tickers, you can put yours there, but we will select probably 4 or 5 because we got like 15 or 20 today, which was way too much on both Facebook and Twitter. While we love to answer them, it's just too much.
We'll get to them. We will get to them. They're parked. They're not deleted. So that's the
exactly.
Okay. Thanks to everyone again. Thanks for all the questions. Quite an interesting show. It's good to get your feelings, your thoughts. So yeah, it was interesting. I'm curious to see how it plays out, how you're going to feel next month. So look, I'm always here for you, buddy. I'll be there. We'll be there next month. But good podcast, and we'll see everybody all next week. Remember, both of us at Dividend Talk are not certified financial specialists through formal education. We are just two guys sharing our journey for inspiration and entertainment purposes. Hence, this is not investment advice. Although we do our best, we can't promise that the information discussed is always correct, nor appropriate for you or anybody else. We always recommend that you do your own due diligence and be accountable for your own choices. As we always say, you can't borrow conviction from others. Last but not least, by listening to our podcast, you agree to hold us harmless from any ramifications, financial or otherwise, that occur to you as a result of acting on information provided in this podcast.